Welcome to another episode of Boom and Bust. I'm your host, Tony Clement, here at the News Forum, where all voices matter. I'm pleased to welcome back Tom Caldwell, the chairman of Caldwell Securities in Toronto. Tom is a regular visitor commenting on the economic news of the day. Welcome back, sir.
Thank you very much, Tony.
I guess the first thing is a few days old now, but obviously let's discuss the Bank of Canada's decision to hike the rates and to pause. Good move, bad move? What's your take on it?
Well, remember, monetary policy, particularly interest rates, you're trying to hit a moving target out there someplace, 12 months, 18 months out. And I think most of the people in the market participants, bond traders, et cetera, and I'm a has-been bond trader, we got the feeling we were reaching the end of these increases, that they were going to pause at some level. It might be another quarter or 25 basis points, but to wait to see whether the rate increases beforehand or just to happen are starting to bite in. You're starting to see some interesting things. So inflation is coming down a little bit. So that's encouraging. So I think they're sort of pausing. How's it going to work out from here? Do I need to do more? They may well have to do a couple of little ones, but I think we're near the end of that cycle.
And yes, and so from your perspective, then having a pause is good for the Canadian economy, and that shows that we're making progress?
Well, I think it's a good thing. Interest rates eventually can choke off everything. If you go back to Paul Volcker and 18% interest rates, literally everything kind of stopped. So I think that's always an anxiety factor for markets. I think the feeling that we're sort of pausing, let's see how it's working, let's see how the economy is behaving, is a positive thing. Yes.
And then we saw almost the same time the U.S. Federal Reserve also rose its rates, but didn't, unless I'm mistaken, announce a pause. So is that a good or bad thing from your perspective?
Well, the central bankers, particularly in North America, are talking tough, probably tougher than they're going to act. And Powell at the Federal Reserve Board is talking tougher. When I was a young student, we used to talk about central bank policy and moral suasion being one of their tools. Well, what they're doing is they're trying to jawbone the market into slowing down a bit. But like it or not, inflation has been, and ever shall be a permanent fact of life. Whether it's at 2% or 8%, it's always going to be there.
Indeed. And so going along with this, we also had some other numbers that came out in the last few days, particularly on economic growth rates. The U.S. announced a fourth quarter 2.9% growth rate. Does that mean that there's less of a chance of a U.S. recession, or is that a dead cat bounce, or did you have any thoughts on that?
Monthly, quarterly numbers really don't mean a great deal. But I think the sense is if you look at earnings coming in, the first earnings toward the end of last year that are now getting released, they're actually beating expectations. So if you take a look at the world today versus, say, 3 or 4 weeks ago, you're seeing less concern about inflation, less concern about interest rates, and less concern about a recession. People are just calming down a tiny bit. Now, markets are still wobbling, but it's like throwing a pebble into a lake. You do have that ripple effect for a bit. But I think everybody's being a bit more positive looking into the future. And I think there's grounds for that too.
Yeah, I think, well, you've been pretty consistent, Tom, I have to say. You haven't been on the side of talking us into a recession. You've been a bit more optimistic than that, but it seems like your optimism is well founded at this point, right?
The basis of my optimism is that I have discovered that optimists are richer than pessimists. Okay. And I've tried to stick with that policy.
Yeah, that's not a bad thing to consider at this point. Let's talk about Canada, back in Canada again. Obviously, we were looking at the growth rates in Canada while we were looking at the U.S. growth rates. That's obviously a pastime for Canadians, is always to compare U.S. On everything, including growth rates, the economy, politics, you name it. And there was a 1.6% growth factor rate for fourth quarter for Canada, I guess I'd love to. We're going to take a brief break and then get your point of view on whether that is grounds for worrying about a slowdown, or again, let's not hit the panic button yet. Tom, we'll get your point of view on this after the break. Please stay with us. We'll be right back. Welcome back to Boom and Bust. I'm your host, Tony Clement, here with Tom Caldwell, chairman of Caldwell Securities. So, Tom, 1.6% Q4 growth rate for Canada. Is that again? I don't want to read too much into it. You're teaching me well. Just one quarter's stats. But do they tell you anything, or is it something that we shouldn't consider on its own?
Well, Canada will be dragged along by the U.S. at some level. We do have core industries that can do well, and can do well if the government allows them to well as well. For example, resources, whether it be in mining, whether it be in energy, these are and food stocks. These are key components of the Canadian economy, and clearly they're doing reasonably well. We used to joke that Canada is basically banks, rocks, and grease kind of thing, and trees sort of thing. So our resource sector is going to benefit by a resurgence of any kind of activity, China or anywhere, and also in the United States. Our manufacturing base is tepid; it's weak. We are very vulnerable to whatever they do in the States, particularly any pejorative policies that benefit America versus the rest of the world on electric vehicles, for example. So we are always in a vulnerable position and need to have policies to counter that. I don't think we have any to speak of. Also, there's in the major cities, say like Toronto. Toronto is still in a slowdown, and I just came back from the downtown towers underneath. Many stores, restaurants are just closed, and it's part of the not return back to the office. And it's exacerbated by city policies that decide everybody should ride bicycles. So it's a nightmare. I'm having trouble with my staff coming into town because the war on cars is more or less a war on business. So there's all kinds of levels to the Canadian economy. And the big enemy to the Canadian economy has been misplaced government policies, values, or ideologues being in charge of the store. But I think it's a great testament to the strength of the free enterprise system that the Canadian economy is still doing reasonably well in the face of absentee landlords, if you will.
Yeah. No, you raise a good point about how things are interlocked and how municipal decisions can have a huge impact on business. So don't get me started about the war on cars, but might be slightly outside of our ambit, but I tend to agree with you. State of the market, Tom, the markets, a lot of volatility still. What do you think that'll continue?
Well, it's interesting. I was talking to a client the other day, and the lady was saying, well, with the condition of the markets these days. And I said, well, what exactly is that condition? And I said, the markets are always up and down. There is no time more uncertain than the present. My job as a manager, a money manager, is to see through the adversity, go through the ashes and say, where are the bargains here? Because you only get values in difficult times. If you wait till everything is perfect, the market will be fully priced. That's the worst time. That's the time when you should be letting things go. So the markets actually, there seems to be a firm underpinning to markets, even though it is volatile. As I mentioned earlier, it's like a pebble being dropped in a smooth lake. But I do think there's an awful lot of money in the world looking for a home. Now, Canada is not seen as a particularly attractive investment destination, but there is still an awful lot of money within Canada looking for opportunities. The example I believe I've used in your show, if you look at this fellow down in the Bahamas with this FTX internet or crypto, with his Hypo Marx hairdo and Park Cargo shirt, attracting billions of dollars. It shows you how desperate people are to find a productive use of capital. So this massive amount of capital is kind of underpinning markets. Whenever there's a drop-off, it picks up. Now, you've seen the tech stocks that were massacred in the first 3 quarters of last year start to get some legs and come back a bit as everybody's calmed down. It's just that their valuations were so high, they had to come back to earth a little bit. They're still pretty pricey. So you're seeing now a reaction particularly in the techs, and also in other sectors of the economy where the tone is getting better, and I see that as quite positive.
Those are all good points, and I should say, just for the record, for all those people who have all that money to spend, Boom and Bust is always looking for new sponsors. So just want to get that up there.
And we're always looking for new clients too. So throw us into that.
Okay, yeah. And Caldwell Securities is always looking for new clients. Good point. So hopefully they're watching our show because they've got
and advisors too.
Exactly. We can both team up on that. In all seriousness, we're going to continue our conversation with Tom Caldwell, Chairman of Caldwell Securities, after this break. Please stay with us. We'll be right back. And we're back here at Boom and Bust. I'm here with Tom Caldwell, Chairman of Caldwell Securities. Tom, what do you see as the biggest risks for our economy these days? What are you concerned about?
I think the biggest risk is still government. I don't like to be harping on about that, but I mentioned the word ideologues. These are people that have an idea of how the world should be and how you should live your life, and are prepared to pursue that at all costs to everyone else. And we've also stifled intelligent discussion of any topic whatsoever. But if we were to take a look, starting at the federal level, the government is fixated. Our prime minister is fixated on climate change. I'm not even getting into the debate of that because, there's talk about is the science good, bad, and I don't know. But my basic point is that is dominating the agenda at the cost of national unity, the cost of Canadian companies that are dependent on energy. I mean, for example, every single person that owns a home is paying $50 to $80 a month carbon tax because we Canadians like to stay warm in the winter. That's obscene. The government talks about we want to help people. Get rid of that. Canadians shouldn't have to pay that for heating their homes. That's absolute nonsense. But this cost, this tax, and all the policies related to that, and then the second level of policies relates to any group aggrieved, real or imagined, money is just thrown at them. And healthcare is another big issue. My wife and I were reaching an age where we're using the healthcare system a lot more. I'm on a first name basis at the drugstore now, as opposed to Canadian Tire. So that's part of getting older. But there's a lot. Money's not the answer to everything. Part of it is culture. Part of it is emphasis and part of appreciation. So there's lots of things we need to do as a country, but we can't be locked in a mindset that is hurtful to other people. Just to, again, I go back to the bicycle thing, because people think this is a good idea and are going to impose it. And that's what ideologues do. And we seem to be run by ideologues who aren't thinking of the secondary results or tertiary results of these actions. So if I say, what's the biggest threat? We should have a policy of let's be really good at something. Our tech companies, we've had great tech companies, and they all blow themselves up, whether it be Nortel or Mitel or any BlackBerry. Why don't we have world beater companies? Because we don't have an encouraging, positive host environment to build world beater companies. I've said many times, Canada is a great country to start a business. It is not a good company to build a business.
Yeah, and of course, this leads to, well, I wanted you to comment maybe a little bit on, we had these health talks between the federal government and the provinces. I know it's a little bit outside your bailiwick, but one of the comments that I read was the federal government really had little to offer because the fiscal room is so tight right now. They really can't afford to spend on healthcare. Any comments or thoughts on that?
Well, absolutely. If you're throwing money around just to buy votes on short-term measures, and that would be the mantra, either climate change or go buy votes. That's the policy at the federal level. If you're spending money on things that are just going to get you reelected or hopefully get you reelected, you don't have the money. The cupboard's bare when you get to the real stuff that Canadians need. And like it or not, the demographics of this country are such that healthcare, we need to take a look at it, whether it be a hybrid system of public and private. For example, I had cataracts done a few months ago, and that was at a private clinic. And most of them are done at clinics. So we do have a two-tiered system
Right.
already. And OHIP did pay for part of it, but we have to take a look at it. Isn't just money. Money problems rarely exist. They're money symptoms of another problem. And I think we have to really take a holistic approach at healthcare. Now, this is not coming from a disgruntled person. I mean, I've had heart and back issues. My wife has had heart cancer, stroke issues, and we've been well served by the healthcare system. So I'm not coming as a complaint, but there are issues that do have to be dealt with.
Yes, and everybody has a story about maybe the healthcare system not living up to its billing. That's for sure. And we're going to talk. I'll just give you because we've got just a couple seconds left before the next break. But I do want to talk about not only risks but investment opportunities in this country. Because again, you're the optimist, and we should see both sides of that coin. And then if there's anything unusual about the current situation in which we find ourselves in. I know that's a very broad topic, but is there something unique about or unusual about our current economic situation that makes it different from the cycles of the past or what have you? So think about that. Our guest will be back after this short break for messages. Please stay with us. Hello there, welcome back to Boom Bust. I'm Tony Clement, and I'm here with Tom Caldwell, chairman of Caldwell Securities. So I gave you the advanced billing there. Are there any investment opportunities or trends in the economy that are advantageous for Canada right now?
Well, in Canada, I did buy some an oil stock again today. Did add a little bit to some positions there because I see China coming back on stream. Economy slowly picking up on a world basis, and I think energy prices are going back up again. So there might be one more opportunity here in that sector of the market. Also, if you look at Canada's resource, we're ideally positioned. Copper. I mean, if you think electric anything, you must think copper. I mean, that's and it's used in everything from homes to now automobiles, aircraft, anything you name. Copper is still the core. Gold hasn't really achieved its promise necessarily in American dollars, but it has served the purpose for other currencies that have deteriorated against gold. But as I say, I'm just doing a little bit on energy. That's basically today, because I think there's one more lift coming here in that sector. So there's always opportunities. I still like the financial services area with these slight increases in rates. Their interest margins expand somewhat as the economy picks up. Their business picks up. We've had very little in the way of mergers and acquisitions, which our banks and world banks make a ton of money at. I believe that's going to be picking up as well. So I own a lot of the U.S. banks, Morgan Stanley, that type of thing. But also the Canadian banks are well positioned in that regard. So there's still lots of opportunities right now in the market.
Yeah, and you mentioned at the outset, I'm thinking of rare earth elements or critical minerals. Can we finally get a supply chain that works for Canada in that regard?
No.
Oh, no.
Well, let me put it this way. Everybody, this is it. And I don't know how to evaluate them yet. And they're still in their early phases. But let's say, Tony, you and I discover a really great mine. We're going to put it in production. It will not be in production for 15 years. Yeah. Once every environmental or special interest who happen to go buy the property over the years claim an interest in it. You look at the Ring of Fire in Ontario, an incredible opportunity. Major mining companies around the world have walked away from it because it's too insane to try to do business in the resource area in Canada. So it's unfortunate. That's a fact of life.
Yeah, you're right about that. And I kind of signaled this before the break, but is there anything that you see that is kind of unique or unusual about the current economic situation? Because we do go through these cycles, throughout history. But is there something unique about things right now that are different?
Well, let me give it to you from a Canadian perspective. There's all kinds of anomalous things. We got a war going on, and there's always a good possibility that can get real ugly and a lot bigger. So you can't really evaluate that. But in terms of cycles, I was thinking of the title of your program, Boom and Bust, which is typically the cycles we go through. But what is happening? The Canadian economy is upticking a bit, but we're just not far off the bust level. We're not having the big money-making hits to really create wealth, et cetera, in Canada. And really this economy is going and we're expanding because we can't expand. We have too much red tape, whatever you want to call it, to get things going quickly, to participate in upcycle. So we are having upticks, but it's like bouncing along the bottom, if you will. It's not a really fulsome cycle where we really can build this economy and neat companies and new things. And it's because it takes us too long to get in line with production of many, many areas where we're strong in, should be strong in.
And do you see that changing at all?
I think it's 3 years. I think we have to have a change in vision of the country. And we're going the wrong way right now, because right now in Canada, you can't come up with different ideas. There's no safe place for diversity of thought or ideas or discussion. Right. We all have to repeat the same mantras and buy into it. And that is not a formula for success. That's a formula for oppression. So we've got to open up the game a little bit more. I mean, universities as well. They've got to be able to, entertain thoughts. I don't need to be protected from insane ideas. I can figure out an insane idea or recognize it or create it myself. So I think we have to get a lot more open, be more confident, more innovative, right at the thought process level, right down to let's doing stuff. How can we make it better? And I don't think those discussions are taking place. You'd fall into one of the popular mantras and you got to repeat it. It's like Eastern Europe in the 50s. Yeah. Everybody was saying one thing, but believing totally different things.
Well, as usual, Tom, our time is up, but it was a very interesting conversation. Thanks for joining us again today.
Thank you very much, Tony. All the best.
All the best. As usual, very interesting discussion with Tom Caldwell of Caldwell Securities. Thanks for watching. We'll see you next time.